This is Eric Muathe from Muathe.com. All is well. Let's take a look here, and a good example for why timing is important, especially if you're playing momentum and trying to own a stock only when it is moving and has a high probability of having upside momentum as opposed to sideways action. So let me break up this chart in a couple of ways, and we're gonna do, there was some sideways action here. Let's call it, let's go this period here, and then I'll show you another sideways action period. Remember, this is a monthly chart, so these are many years of sideways action. There's another sideways action period there, and we can see another sideways action period here. So let's take a look at how long this was. This is almost 5 years, this box. This is 8 years. Now remember, 8 years of really no reason to own the stock, in my opinion. Or at least that's one way of looking at it. Here we can see almost 4 years. Now let's compare this with another period where we see some type of momentum. There's a momentum period here in this box. There's a momentum period right there. And there's a recent momentum period somewhere here. Now notice here, this is almost 1 year when the stock was having some bullish period from 2005, 2006. This is almost 6 months. 6 months. And so 0.5 years, give or take. And this period here is approximately one year plus, so 1 year. So naturally, the question becomes, why would anybody want to hold this if they can avoid it? Why hold this 8-year period where there's really no price action, at least no strong upside momentum? Why hold it here for 4 years when there's really nothing moving? It is in a sideways digestive part of its process. Now the question becomes, is it possible to time this entry here, to perfectly time this entry here, and to perfectly time this entry here? This is 20 years of data, and we have 3, let's call it, nice momentum entry areas in the stock. All right, so is there a possible way? Yes, of course there is. If you are disciplined and wait for the ultimate Muathe breakout, you'll see that the ultimate Muathe breakout landed you nicely in those major areas where we have this breakout here, this breakout here, and this breakout here. And so to do that, see whether we can get this on the chart here. To be clear, we're talking about this period here. There is a breakout here, late 2013, and there's a breakout in mid to late 2017. Now all of this, by the way, are breakouts in terms of price. There's a price breakout. You can't see it, but it's squeezed in there. Price breakout there. There's a price breakout here, and there's clearly a price breakout there. Here, here, and here. This happens to coincide with the RSI moving to 3-year highs. Happens to coincide with at least one of the MACDs moving to 3-year highs. You can't see it, but it's right there. And even the other MACD was moving to 3-year highs. We can see it right there. So the first one meets all the minimum requirements for the ultimate Muathe breakout. Price breakout, RSI moving to 3 years, one of the MACDs moving to 3-year highs. So that's good. So again, all the requirements are met, and this is why the ultimate Muathe breakout is time tested and can actually save you the frustration of holding instruments when they are not doing much, and puts you in the best light when there is opportune potential momentum to the upside. This is Eric Muathe with Muathe.com. Love and light, light and love. Namaste.